All right. What is up, tycoons? What is up, traders? Taking a look at Yearn Finance. Okay, this is one of the channel favorites. YFI is the ticker symbol. We're breaking it down on the daily chart. This was actually a viewer request. I get lots of viewer requests. I do those every single week. So if you want to see your ticker in the next video, all you have to do is comment down below, and I'll be happy to make a video on it for you as soon as I can. Now, we are going to break down how to trade, okay, and how to actually spot high quality trade setups. We'll take a look at some of the chart patterns. Okay, there's been many easy to identify chart patterns. I'll go ahead and break those down for you so that they can be a little bit easier for you. And so you can start to do this on yourself. But in specific, we're actually going to take a look at some of my macro outlook for 2023. Okay, this video is being recorded right at the end of 2022, and unfortunately I do think there is lots of pain. I definitely think we're going to retest these lows here right at 3054. Okay, so if we just zoom in real quick, you can see the lows that I'm speaking of are right here on the chart. It would make a lot of sense for us to retest those. I'll get into those, and I'll go ahead and just break everything down looking at the recent price action. Okay, so make sure to subscribe if you guys are new to the channel. And if you're already, subscribed to the channel, comment down below the rocket symbol, okay, if you guys are bullish on Yearn Finance in the long term. And don't forget to like this video to help the YouTube algorithm. So the main thing that we've been looking at, okay, currently is this pattern right here indicated by these two trend lines. All right, it's pretty much just a simple triangle pattern. All right, really a symmetrical triangle pattern. And we're looking for a break to the upside. I had some bullish price targets to the upside, and we just actually broke the trend line to the downside, and I have some bearish price targets to the downside. I'm going to go ahead and break those down. But before we do so, I just want to go over here and highlight how some of these strategies have worked in the past. Okay, so when looking for the bullish price targets, I always use the Fibonacci tool. Okay, so that's going to be this tool over here. And the reason I do that is because trading is done 70% of trading in all the markets, whether it's cryptocurrency or the stock market. If you believe me or not, it doesn't matter. About 70% of it is actually done by algorithms. So it's very good to start incorporating mathematical formulas such as the Fibonacci's into your trading arsenal, right? And really start to add that to your weapon base. Okay, so for in this instance right here, we had a breakout level right above this line right here. We had our 127.2 and our 161.8 extension levels. Those were our bullish price targets above the breakout level. And if you look here exactly on this inverse head and shoulders, which if you're unfamiliar with an inverse head and shoulders, we have a left shoulder right here. We have a head, we have a right shoulder. All right, we broke this neckline. We got a very sharp move to the upside. Look at exactly where it stopped out at, right at our 161.8 extension level. Okay, so it's very good to start using the fibs and really use those to your arsenal. Now, another thing you can do to actually increase your chances and just overall success, we're going to take a look at the relative strength index right here, which if you're unfamiliar with it, it's the RSI. So all you have to do is go on TradingView and type in the RSI, and you'll get this pulled up. What we have here is a very clear triple bottom. Okay, now typically a triple bottom is a bullish pattern. Okay, you're expecting a bounce off of the triple bottom. So this is like one thing, right? So if you're looking to be a trader, I highly suggest only taking high quality trade setups that have a minimum of 2 or more indicators indicating some possible bullish or bearish activity. So in this case, we have one right here, right? Here's our first one. We have the triple bottom. And if we take a look at the relative strength index, we actually have a divergence. Look at how the relative strength index is going up so much. We have a low, we have a higher low, and a higher low. We have significantly higher lows on the relative strength index versus this triple bottom right here. So that's what's known as bullish divergence. A divergence is when, the price action of the token is doing one thing, remaining flat, but the relative strength index is doing something else. In this case, it's going up. That's a bullish divergence, and we got a very nice pop right there. And, when it comes to trading, you're looking for short-term trade opportunities. This is a very good opportunity. You could have ridden that momentum and set a stop loss once you hit your profit goal and taken profit on that play, as it ended up ultimately reversing. But as I said, you come up here, you either take profit at these levels, or you're setting a stop loss and making sure that you get out of the play with a profit minimum. Okay, whatever your profit goals are. Now, just like we use the Fibonacci's for bearish price targets and bullish price targets to the upside, and we went over how valid it was right here. What we're going to do is we actually look how this is going to be our main breakout level right here. And as soon as we break out past this level, we have bullish price targets to the, or bearish price targets to the downside. We have our 1272 at 52.53. Now, if you look at this arrow right here, look exactly where we come down to and hit. As soon as we break this level, look at where we find support. We come down to our Fibonacci level right here, the 1272, and we end up finding support. Now, ultimately, this is now our new breakout level to the downside. Okay, we were looking to see if we were going to be able to break past our major retracement levels, which, if you're not familiar, these are the three most important retracement levels you could ever look at: the 61.8% level, the 50%, and the 38.2. They're going to specifically help you identify if you're in a trend continuation, which in this case, it's no secret that we've been in a bear market. So obviously we're in a downtrend, right? So what this does is this measures, okay, so we're taking our swing high down here. We come down, we have this large impulsive move to the downside. This is our downtrend. We get a perfectly healthy retracement up to the 38.2 retracement level. And instead of breaking through these levels, right, if we would have broke through these levels, then we could have seen a reversal and hitting our bullish price targets, right? The last time I did a video on this, we were in between our zones, right? We were trading in this pattern indicated by these trend lines, and we were looking to see if we were going to come up and test these levels, be able to break through them, or get a rejection, right? So we clearly got rejected right here, and we're now in the possibility of continuing that downtrend, right? We came up, got a healthy retracement, and as soon as we break this level right here, which is roughly 52.83 or 52.53, whatever you want to call it, you know, there's a strong possibility that we're going to break through and head down to 43.60. Okay. And, you know, if we look at the larger chart pattern again, you know, these triangles right here, it looks like we're in the beginning phases of a breakdown. So what we're really waiting for is a break below these levels. Now, one thing you do need to be prepared for, right? And ultimately just saying that it's not game over for this. If we draw this down a little bit, what we can see is that we actually have the MACD, okay, which that's what this indicator is going to be right here. This is our MACD. A buy signal is going to be when this red line crosses above. As you can see here, we got the red line cross above, and then we came up to our 38.2 rejection level, and ultimately got rejected there. But we did have a nice move to the upside. If you look right here, it's almost about to curl above. So we could actually be seeing a little bit of some bullish price action on YFI, on Yearn Finance, in the near term future, if you're watching this video shortly after it's put out. But you need to be very mindful of this 52.83. If we do break below that level, there's a high possibility we could end up heading lower down to 43.60. Now, one thing I also want to highlight is we mentioned taking high quality trade setups. If you look here, we actually have some bullish divergence going on, which is, you know, obviously going to be the opposite of a bearish divergence. But if you look here, we have a low, okay, right here, we have a low, and then we pretty much have an equal low right here, okay? It's not exactly the same low, okay? Again, we are slightly above this level, but look at the relative strength index. It's in a sharp uptrend right now. Okay, creating a low and a higher low. We have a slight bullish divergence. So not only do we have a slight bullish divergence, we have the MACD trying to curl above. If we get this MACD to curl above and give us a buy signal on top of the bullish divergence, we could see a short pop. But we have to be very mindful of our major retracement levels here at 755.58. or 7558, 8272, and 8986. If we get rejected at those, ultimately we're just going to continue the downtrend until we break through those levels. That's when we have the possibility of a reversal and coming up to 9593 and 10755. Okay, so that's pretty much what I wanted to highlight there. I really like using the MACD, honestly, for sell signals. To me, it's very efficient in sell signals. So we'll take a look at a really good example right here. We can see, you know, the red line crosses below the white line right here. That's going to be your sell signal. And if you take a look, that happened exactly here on this candlestick. And look at the next two candlesticks. Huge move to the downside. Now, coincidentally, these two candlesticks happen to be exactly when FTX collapsed. But one thing I want to mention is that price action is always going to precede news. and you're going to, have a much better impulse and, finger on the market by looking at these indicators. Okay. Now over here, again, we can see another MACD sell signal where we're seeing the red line cross below the white line, right? We see the red line cross below. That happens right here. And we take a look. What do we know? You have a little green candlestick right here, and then a very sharp move to the downside. So anytime you're looking to be cautious or know when it's a possible time to sell, you need to pay attention to the MACD for a sell signal. So that way you can know to get out of the play and take your profits or possibly go short in the market. So now that we've broken down really some of the recent price action and taken a look at the ticker for, Yearn Finance, I really want to highlight this chart right here. It's a very, very nice chart. It's one that everyone should have. Okay. One of my favorite friends that's, also a trader, he actually has this chart as his background on his desktop. Okay. It is the Wall Street cheat sheet. Psychology of it says Twitter OG right here. This is really funny, actually. But this is just a psychology of a market cycle. Okay. Someone has altered this and edited this a little bit, but it's still very, very important and very valid. So what we had in the bull market was all of these phases right here, right? We had hope, we had optimism, belief, thrill, euphoria. Okay. And we're going to take a look. And let's go ahead and just do that right now. Let's look at Yearn Finance. Okay. And so I know that I have a lot of lines and things drawn up here. Okay. But go ahead and just take a look at this. All right. We can see that this is obviously the peak of euphoria right here on Yearn Finance. Okay, this is when we peaked out. This is when everything was going to the moon. This is when NFTs were selling and making millions, right? So if we go ahead and take a look back at the chart, that is obviously our euphoria phase. So for 2023, you have to ask yourself, what phase in this part are we in, right? I think that it's obvious we're pretty much past complacency and anxiety, but are we still in the denial phase, right? And this is where people will forget soon enough. It was just a few paid promotions. We have panic right here. It says, shit, I've exposed on Medium. I need to take a break from Twitter, right? And this is when everything is really collapsing and giving back all of those gains. So remember in the beginning of the video when I said, I think we're going to come back and retest these lows. Remember, see how it looked exactly like this, right? The candle that I was looking at, if you go back in the beginning of the video, it looked exactly like that. I think there's a high possibility we're going to come back and retest those lows, right? So most likely we're somewhere in between denial and capitulation. And it's going to be a bumpy ride in 2023. Okay. It's not going to just automatically go back up to the moon, guys. Okay. Now, it doesn't matter whether we're in this phase, or whether we've already seen capitulation and we're in anger. It's not going to go back up anytime soon. Now, one thing that I do want to highlight is that disbelief, the end of this cycle, is actually the beginning of this cycle, right? And so once you see this part here, and you see us start to get that rally, there's going to be a lot of disbelief and there's going to be a lot of people in 2023. Now, the bottom doesn't have to come in 2023, but I do favor a bottom in 2023. There's a possibility with this could, this phase right here could extend into 2024. But when things really start to recover, there's going to be tons and tons of disbelief. Okay, everybody. But again, look here. This disbelief is actually the beginning of the rally, and that's when people get hope. Then that's when they get optimism. Then that's when belief comes in and thrill and euphoria. So, eventually we will hit this market cycle here again. Okay. But we have to make it through this denial, capitulation, and depression and disbelief phase. We're somewhere in between here now. There's no possible way of predicting where we're at. Okay, but we're here, and this is what I mean. This could be the entire 2023 right here. There's a very strong possibility that if we don't, get another capitulation, as there's been so many capitulations. Like, I'm so tired of the crypto market capitulating because of fraudulent people like FTX or just ridiculous people with over leveraged exposure like Three Arrows Capital. These people were just completely being irresponsible and just straight, going on extreme leverage with no stop losses, right? And just ultimately just going bankrupt, right? And now whether it's through fraud or whether it's just through bad money management, that's very that part doesn't really matter, but that's caused us to go through this phase of the market cycle, right? And the whole psychology cycle. So again, we're somewhere in between here. So now that you have this stuck in your brains, we'll go back, all right, and we'll take a look. And this is our chart, okay? Remember, this is that candlestick that I said that we're most likely going to come back down and retest. All right. We had all of our bullish phases over here. We had all of our bull market phases. All right. We had disbelief. Then we had hope. Then we had the thrill right here. And then we got euphoria. Okay. And then now we've seen capitulation. We've seen some anger. We're seeing some panic in the market. And notice how we're consolidating sideways, right? I'll zoom in a little bit so it's a little more clear, but look at how we're starting to consolidate sideways, right? If we go back to that chart, you can see that, this is, we've already had multiple capitulations in the crypto market. So there is a possibility we've already hit this phase, but look at what it does. It makes a low, a lower low, and a lower low. It still goes down, guys. Okay. But it just does it at a more choppy pace versus just straight down like the market has been. So there's a very strong possibility that we're in this phase for 2023, and it's going to be a very, very rough ride sideways until we ultimately get out of this phase and head back into disbelief and ultimately restart the cycle again. Now, I do think it's going to take a lot of patience. So if you're not a trader and you're looking to be a long-term holder, don't rush into things, right? Just because you see something hit a new low does not mean you have to go all in. You need to save some capital, right? You need to dollar cost average and just slowly, what I would do is take the amount of capital that you have and give yourself a 12-month to 18-month rate, right, where you take the money you have and you either divide it by 12 or you divide it by 18, and that's how much money you're going to invest each month, right? None of this is financial advice. This is just a suggestion. This is a free YouTube video, and nothing more than that. Okay, so don't try to sue me or anything. Just really trying to give you guys some of my honest thoughts and opinions. It is still going to be rough. Most likely the US economy is going to go through a recession, and the US economy has a lot to do with the price of Bitcoin, with the price of Ethereum and altcoins. There's many institutional investors that invest in cryptocurrency, and as long as the Fed rate hikes keep going up and they hold those rates at a very high level, combine that with the fact of high inflation, and yes, inflation finally is starting to go down, but if they hold those interest rates up higher, then they're going to have to readjust how they're looking to invest in 2023. And unless they get those rate cuts that everybody is pricing in, most likely there is going to be overall pain in the market some more, anywhere from another 20% drop to another 50% drop. So you need to prepare yourself mentally for that. Not saying it has to happen. There's no guarantees, but it definitely would not surprise me if we come down and retest these lows of about 3,050 on Yearn Finance. I showed you guys earlier how we used the Fibonacci tool to go ahead and get some bullish price targets, and how those bullish price targets and bearish price targets hit very nicely. Again, we'll just emphasize that real quick. See, we got our breakout level. We came up exactly to our 161.8 extension level. Okay, you see here, we hit our breakout level. We got our 127.2 extension level. We came down and hit that level. So if things want to continue in a bearish trend, all right, and we break below our breakout level here of 52.83, then there's a strong possibility we're going to hit 43.60, 31.85, 30.54, and 28.30, which is going to be our 161.8 of this original breakout. So that's really what I'm watching right now. If we come down to the 3,000 levels, right, and we hit 3,200, we get close to this 31.85, I will be doing an update video. It would make sense, as we are starting to kind of get a breakdown from this pattern here, for us to get a nice sharp drop to the downside, and that would be a breakdown. There's no guarantees. We could actually get a look below and fail, and then actually come back up into this range. Anything's possible. But hopefully you enjoyed this video. Hopefully you learned something new about the MACD, about the relative strength index, about using, some chart patterns and combining some of those things together to give yourself an edge. If you did, smash the like button and subscribe to the channel. And don't forget, I do those viewer requests every week. So all you have to do to get your ticker in the next video is comment down below, and I'll be happy to make a video on it for you. With that being said, if you made it this far into the video, I really appreciate you. And I think you're going to enjoy one of these next two videos as well. So make sure to click on one of those.